We are live.
We are back. We found our drafter got free from the other body. And I've got a side by side we got this morning. One of the sections says taxes. Do you have that? No.
I don't have anything related.
I can share that with Zane, but to save time, I can just go ahead and use
I
the
think
Senate
that
Natural
would be
Resources.
best.
page.
We're all looking at the same thing.
Interesting.
Yeah, divide and conquer. No one seems the same.
Just give me a link. If I have one. Should I start?
Mm-hmm.
Okay.
Yep.
For Beacon Legislative Council, this is these are the tax revenue portions of H 687, which was just voted out of the House last night. First change is in section 68. There was a section in the bill for the definitions for the tax credits related to downtowns, village centers, where some of the terminology was being changed to just change the names of those centers that was going to take place in 2027. The House thought that since that hasn't happened yet, to just save that for the future when those designations or the name, the terminology is changed in the future. So they decided to leave it out. They just thought it was cleaner to do that. There was no substantive difference in doing that. The next tax related thing would be in section 73. This was the Senate's version of a property transfer tax change that had the 2.5% rate applying to the transfers of second homes, or at least that was the intent of what the language was trying to do. The House did, in discussing some ways and means, they talked about the Department of Taxes feedback that they found it difficult to administer, and so, that's not the only policy reasons. So I'm just trying to give you some background. The House did decide to revert back to H 829, which was the House's proposal to change the property transfer tax. So under that, and what's in this bill now, it imposes a 3.65% rate on the value of a transfer in excess of $750,000. At the same time, it increases all of the thresholds for principal residence transfers. So for those that don't receive assistance with their mortgage, it's a 0.5% rate on the value up to 200,000. Under current law, that's 100,000. And then for those that receive assistance from VHCB, VHFA, and USDA, it's being increased from 110,000 to 200,000, and in that case, there's no tax imposed at all. Up to that threshold.
So it's based on the value of the property, not on the nature of the property or the usage of the property.
This is for principal residences only, those thresholds.
First of all,
In both cases, it's principal residences, but there's a difference between those that are getting a subsidized mortgage, from those entities. Pay no tax on that on the value under that threshold. And, other principal residences pay 0.5%.
We haven't raised, I know, when we put the water, clean water, and somewhere I saw an increase in the clean water surcharge. Senator Sorokin and I tried to get that level up. Because our housing values have gone up since we said it significantly. And they've definitely gone up more significantly since then. We also bought the clean water surcharge because it's only, I can go out and pour pure phosphate on my front lawn. The reason is houses wash up, puts phosphates in. Well, all of us that are here, you pour all the phosphates you want, only the new people are paying to clean up the water, so that was an argument. I think I'd be concerned about increasing that. And I saw that somewhere.
Yeah, so I can explain that. That's the next section here. The current rate for the clean water surcharge is 0.2%. The rate is being increased to 0.22%, and that, at least as this was conceived in 829, but I think that the revenue offset's the same now. Just looking for a JFO nod there. So this is offsets the increase in the thresholds too, because the clean water surcharge has those thresholds for the principal residents. They don't pay clean water surcharge on the first 100,000 of value, and this is changing. Well, actually, it's not. Actually, it's under current law, it's 200,000 of value, and it's being increased to 250. But it's being increased to 250 for the ones with the subsidized mortgages, and then it's going from 100,000 to 200,000 for other principal residences.
And what's it doing? What's the clean water surcharge? Where does that start? That's on the whole thing?
So for the principal residences, like I was just saying, like under current law, there's no clean water surcharge in the first 100,000 for principal residences. This is increasing that as to having no surcharge in the first 200,000 for principal residences. And so to pay,
raising that.
to pay for that, that's why the rate's being changed to 0.22. Sorry if I
But
wasn't clear.
we've raised them to 200,000. But we're raising their rate to pay for the rate for the 200, we're raising it to 200,000, so we're robbing Peter to pay Paul.
It works out in a way in which you're paying less clean water surcharge on the value, depending on the value of your principal residence. You could benefit if what you're buying is a modest principal residence, you may actually be paying less surcharge under this. But there is a point at which
I'm not sure that there is a modest principal residence under 200,000.
it wouldn't be under 200, it would just be that since you're getting that extra break between 100 and 200,
I'm gonna pay
In-
more too.
the more, but then there's another tier in which you're still paying less up until a certain point. Is that, am I making sense with that? Like when you first exceed 200,
Okay,
you're still paying less at that point.
okay.
It's just, and I don't know if you guys have done math on the exact value that at which you would hit it, but it's
So they,
10% increase.
Yeah, I haven't done the specific bet for the record, temporary interim fiscal office. The other piece of this is for principal residences, they're paying the clean water surcharge on all of the value. And so there's a difference between what's happening in principal residences and what's happening in not principal residences. So those folks are having their rate increased and having, no associated change in exemption values. So that's part of the conversation.
Okay, thanks for that attention. So if you follow, for the commercial properties, for instance, they are going to be paying more surcharge.
that's
There's
the
no-
principal residence, I'm going to be paying the clean water surcharge on the entire value?
No,
No,
No, on the value above 200,000
for principal residences, yes.
for principal.
he was just making the point that not all properties get that.
No, so.
Yeah.
this is
I-
purchase house.
You have a question?
Is this when you purchased the house?
Yes, this is when you purchase the house. And this just makes, because when that bill came to us, and we didn't spend a lot of time on it because Senator Hinsdale had her proposal, so we just walked through it. But as I remember it, they had several layers when it first came to us, and they actually reduced the surcharge, I think, they reduced the PTT under 300. So what they're sending back to us is just a 3% over the 750 house. And they're doing essentially what we did. They're raising the level that you pay a very limited PTT, and they're even raising a higher level if you're getting a subsidized mortgage. And so we've got a box in there somewhere around 200.
So I have my calculator out and I'm a lawyer, not a fiscal analyst, so, but effectively by raising that threshold, people are paying $200 less for my quick calculation here.
Or whatever the
On a
threshold
$100,000
used to
value.
be, I remember it was $200.
So since you're saving 200, that the extra 0.02% that they're increasing it by. Whatever value that is that you multiply by 0.02 to exceed $200, that will be the point at which this costs you more for principal residence.
Okay, and they're still doing non-principal residents. So the tax department can't calculate a second home, which is a non-principal residence, for our property transfer tax proposal. But they can calculate it for this one.
So principal residence is already, if that's the threshold, we're already based on that, they've been based on that since the 1980s. For the transfer tax, the definition of principal residence that's used is based off of the land gains tax definition. So that's an established thing. That's an established thing. But I think the problem with the proposer of this, we're talking about the PPT on second homes. If I recall, I think the department has said the problem was with identifying non-principal residences that have the landlord certificate, and with the problems with the landlord certificate not necessarily being filed, even though it should be.
So this one would raise the property transfer tax on, and significantly, 3.25% on any property over 750. Which is a lot of commercial property, so this is going. Somebody today said in a $2 million building, that's $30,000. I was kind of worried about our downtowns. Nationally, downtowns are struggling. I've yet to see one of our thriving downtowns we keep talking about. I see a lot of depressed downtowns. And I'm concerned about that, about making it more expensive to sell.
So. There aren't too darn many buildings that are $2 million buildings that people live in.
No, well, apartment.
And it would be seamless that the whole brains in this room separate those buildings from what most owners commonly think of as a house.
I would separate out,
If you do that, you lose a lot of money.
you lose a lot of
If you
money.
change the rate to keep the money up, but you don't. You could adjust it to get the same amount of money instead of. Going back and telling our folks, well, this is what the price is, but if you have a mortgage that's under the such and such, it just becomes
This,
complicated.
I don't wanna long dick and just emote, but this is an absolute deal killer for me. I mean, we're gonna go back to our communities and say we did all this regulatory reform. But he put this huge new tax on the transfer of any property over this value. That is motels being turned into residential housing. That is all affordable housing, which are usually at the biggest tickets. That's senior housing, that's commercial to residential. They're gonna look at us like, what housing reform did you do?
I agree, break it out.
You don't get
What
any
it
money
is.
that way. That's why they did this.
I just really like the Senate construct, which is focusing on identifying second homes and taxing those, because if you subscribe to the theory that's been presented, I forget who it was from JFO or otherwise, that the more you tax something, the less you get of it. I'd like to get less second homes in Vermont, or at least those that choose to have them will pay more, so.
They can pay more.
Yeah.
And Bolio said they have 90% success on the landlord certificate. I guarantee you this would get us very close to 100%.
If I'm gonna get taxed more, that's a real incentive to get your
Exactly.
landlord certificate. Okay,
I think the commissioner, I don't wanna put him completely in the middle, I think he's trying to say the same thing to both of us, is he here? But I think he needs to do it in a room where there's both the House and the Senate present. Because if you took, for example, one of the major concerns he raised was on-farm properties, I remember Senator McDonald saying, is that our biggest problem? They exempted on-farm properties from their proposal as well, just recognizing, okay, we don't wanna take categories that are fuzzy and hit them. So,
think of a mansion around here that was on a lot of property, had turrets. It could easily be classified as a farm, all they'd have to do is put some cows or goats on it,
right,
or lease it out to a farmer. To put,
The exemption that's being referenced, the leasing wouldn't work. It would has to be 25 acres enrolled as ag land in current use, and it has to be a buyer and seller that qualify as a farmer, which means at least half of your income is
from
from
the
the farm.
seller. Okay, oh, this would be transferred, because there's a lot of houses that lease out their 25-acre front lawn to a farmer to pay,
Right.
and that their front lawn is under current use, so
They
it might be
purpose-
30 acres.
They purposely left that qualification for current use out, as well as there's a third alternative way to qualify that they left out because they were trying to make it like traditional farming.
I share the concerns, because this is gonna make our most dense housing more expensive, whereas the Senate construct does what we wanted to do, which is to make second homes, less occupied homes more expensive. So I feel like this, what they're proposing is just moving us in the wrong direction. I really hope that we can get it back to where the Senate was.
Okay. I know, well, we're going into the afternoon, but I think we can say we are concerned about this. Its impact. We were looking at only doing second homes.
Yeah.
Its impact on apartment, commercial homes, and its impact on commercial buildings, which especially in our downtowns are not gaining value. They're definitely declining.
I did send an email to JFO and you, and I'm curious if to keep their $200,000 exemption to, again, I think just for the time, it's been 30-40 years since we set that threshold, if we could raise our second home property transfer tax.
interesting.
So if that were to go up to 2.75% or some other percentage, and I know Ted's really busy this week, but I did ask if that's like, there's a percentage that might cover that.
Or we could keep it on homes over 750 at 3%.
The idea of taxing different kinds of property differently, different uses, which means by definition, you're going to be taxing different people in different circumstances. Going back, Mark, bear me out if you remember it's the same rate as mine. There's always been a sense of putting a higher tax on certain properties, in part the little subject, because that's where the money is, but also that it's more ethical to tax according to ability to pay. However, the emphasis, at least for me, and my understanding, was never that we should tax certain properties more. The main thing was to tax homes less. That was the idea. And now if our whole idea is to concentrate development downtown and designated areas, you want to encourage that. You know, I don't like, I know that, I think Keisha's right about this, given in the context of this bill, what we're trying to do.
People most able to pay are the ones with second homes, so that's why I definitely think our position is the right way to go. I could be a deal breaker on this, this is a pretty critical point.
I would like to correct something from before when I was trying to do math. Clean water surcharge and 100,000 of value, which is that's what the extra that's being exempted. It's $20 because it's 0.2%.
Oh,
So 0.2% on.
And it's gonna go to
100,000 would be-
0.22.
It's going to 0.22, so that extra
Is that
.02%. Yeah, that's like struggling, it's.
The realtor is shaking his head and he
What's
doesn't make his head.
that, yeah, that's 22,
It's $22 per 100,000.
Yeah, so that extra $2 per 100,000, you need to hit $1 million in value before you're back to that 20 that was given in the first place. So I'm just saying that it's gonna be more than $1 million property, it seems like,
And we can,
before the,
we can probably agree with that. I think it's the, upping the tax over $750, I can live with on residential homes. So if you don't like it, I think that, but commercial and rental property,
Affordable housing.
yeah, the affordable housing
Yeah.
property. We've got something in one of these bills to watch for the sale of senior housing.
Yeah.
And these, you know, we've got nursing homes that are being bought. We might even have hospitals. I don't think we've got any hedge fund buying hospitals.
Colleges, I mean,
Yeah, that's right.
yeah.
The colleges that are closing that are getting bought and turned into, I think one's an environmental.
And I get that the commissioner, this is new territory, so he wants to be cautious. So I didn't hear him say, we absolutely can't do this. I heard it just him say that it would be hard. And I would just say this is important enough and this is the right policy that it's worth the effort. So I think we need to task the tax department to do this. And there will be a lot of legislators back next January. And they will be able to fix, adjust, or accommodate concerns that come up while he's working through the implementation of this.
if I can help you with the problems, like I'm not, you know, this is from. Not from a non-political place. I think that the difficulty would be identifying what's commercial inside. It would be mixed use. It would be when people are living in something other than the house.
Right.
Did
I
did
think,
we clarify that more? Didn't we say if it's multi-unit, but you live in it, you're exempt?
I think the problem the commissioner would keep going back to is the grand list categories are determined by listers. And they're not meant for this kind of purpose. I think so just because it's commercial in the grand list, for instance, doesn't mean that everyone would agree it's commercial, et cetera.
Right.
And that's the problem that's run into when it comes to trying to apply property tax to things. So it's a bit of a proxy situation. It's not exact. And then so the fallout from that would be people who claim an exemption, the department takes issue because the grand list says one thing. And then it gets either challenged, appealed, and then the facts come out. And it's just that going through that and making taxpayers go through that too, I think would be a concern, a policy concern. So it's the idea of being able to identify what's what.
So if we leave out non-homes, this is property transfer tax. If we just put it on residential property over $750 and do the clean water change, are we balancing? And if we get,
You get very little money, I think.
yeah,
There are second homes that are $300,000-$400,000. And I would want those second homes to pay.
Depending on where they're
Yeah.
located.
And I think that these are, this is the discussion we need to have, because it's come down to how can this be administered?
we are back and forth.
Is it responsible? You know, what I understand is in 6 months, we're supposed to have the commissioner coming back and saying, if you wanted to separate out second homes from the property tax, this is how you would do it. He gave us his preliminary reporting, and it seemed to point to this methodology, frankly, using landlord certificate and homestead declaration. And then he pointed out all the categories that they're just not using well. To me, this is the perfect experiment to tweak things and get things right, because it's a very discrete number of transactions. If we try to do this on the property tax in the next 2 years, and we have no real information and no real changes requested about categorization to the listers, saying start to look for these differences and take them seriously, these categories, then we are nowhere near having better information about the categories of property we have in the state.
Okay, we're getting called upstairs. Keisha, what you're saying is you want to stick with your proposal that's in.
Because I can't go home and say, as the housing chair, and say, on my watch, all of these types of properties are now facing a huge new financial penalty.
I just want to say one more thing. I wouldn't be so entrenched in this position if the statistic that Vermont is the second highest per capita number of second homes in the country. I would back down from this, but we have a second home problem and a housing crisis in this state, and I really like this tax policy
It's
to
also a
address.
second home problem because recreation and that kind of spending is one of the highest sources of revenue compared to any other state.
Right.
So it would be natural to expect it would be high there. It's part of our economy.
We are taxing them for our schools, even though they put no children in our schools.
But we attract people who want our beauty, and we don't have a workforce. And, frankly, now seniors getting out of their homes are looking at properties of $750,000 or more, whether it's a large senior housing project or it's what's new on the market that gives them comfort and ease and connection to their.
I think we decided we're not concurring on that.
Okay.
All right, I think that's all we can do.
Is there anything you need me to draft or? Is it
Not at
like-
this point.
Okay.
That can change within 30 seconds. That's going on.
Yeah, on occasion.
Okay.
I like that.
There's-
On the next one.
Wow, that's- that's a city idol.